Luca, one of the big takeaways from Richemont, its last outing and also today, was the strength of the jewelry maisons. Why is it performing so well when other categories like watches, for instance, have been impacted by the Asia-Pacific numbers? What is the sort of standalone feature around jewelry as to why it's doing so well?
Well, I think that there are a few reasons for that. First, we need to take into account that Richemont's jewelry brands are really at the very top of consumer desirability. And when we look at Van Cleef & Arpels, when we look at Cartier, there's no debate, despite the efforts by LVMH to challenge this leadership. I think that other brands are clearly behind. In watches, the situation is not the same because the leading brands in Swiss-made watches are private. Think Rolex, think Patek Philippe, think Audemars Piguet. The other reason, I think, is that consumers have gone through a post-COVID-19 boom. They've been buying a lot of products, and the products that people buy less frequently will take more to normalize in terms of demand. And I think that everybody and their dog has bought a watch out of COVID-19, and that will take a while to digest. So I expect watches to be on the back foot for a while longer. But people buy more frequently jewelry, and jewelry has become also cheaper relative to handbags last year, and hence the better dynamic in the category.
Luca, nice to see you out in the sunshine today in that shot. Let me just take you to the regions and what we're witnessing, because we know there's been a lot of tariff noise and we're seeing that impact the consumer at this point as we still wait for more detail around certain trade negotiations. But what we've witnessed is that Japan, an absolute standout in the numbers, a 30% bounce there versus more modest double-digit teen numbers for the other regions. Where do you think this is taking us in terms of Richemont numbers? Are we going to see a hit down the track when it comes to the Asian market still? Is the US going to come off the boil? How are you thinking about the regional perspective?
I think that some of the regional performance we had seen recently was also very much dependent on Forex. The Japanese currency was very weak and it has rebounded to some extent. So it is normal that against difficult comps and with a less compelling exchange rate parity, Japan is normalizing. The American consumers, from what we understand, has been all over the place. This has been a definitely non-linear recovery. We've seen the middle class weakening in the second half of the quarter. We've seen a sudden stop in the very early month of April. So it's been a bit of a roller coaster. And I think that the performance at Richemont today betrays quite a significant strength in brands. For the moment, I'm not too worried about American demand going forward as long as the stock market continues to sustain, and it has recovered very quickly. But we know that the international trade confrontation is still underway. So this could potentially bring further bumps in the road. And I think that the industry and the stock market has to be prepared for that.